Welcome to the deep dive. If you were watching the markets yesterday, it really felt like two totally different worlds coexisting.
Absolutely. Yeah, the Dow Jones just powering ahead, wasn't it? Past 47,900, a new record high. Just incredible strength there.
But then, yeah, at the exact same time, the NASDAQ, all the tech stocks seemed to be lagging. There was this real nervousness about an AI bubble maybe deflating.
Yeah, that split was definitely the main story, a real tug of war.
Well, hold on to that thought because this morning, that whole narrative, it's being seriously challenged, almost flipped on its head. We're seeing a pretty powerful rotation happening right now.
We really are.
So our mission today is to kind of map out these new battle lines, figure out what's going on, and really uncover the two main forces driving this tech rebound we're seeing and pushing futures up.
And those forces are key,
Mm-hmm.
because one's sort of top-down hitting the whole market, and the other is very much bottom-up, sector-specific.
Okay, so what's the first one? The top-down catalyst.
Well, the big one, the foundation, is this growing optimism, this widespread hope that the U.S. government shutdown, which has been dragging on for, 42 days now, that it's finally getting close to an end.
Right, a political resolution. That would be a huge weight lifted psychologically and economically.
Exactly. And then the second force, the more immediate one for tech, is this really blockbuster analyst day from Advanced Micro Devices, AMD.
Ah, okay, so AMD is providing a kind of counter story to all the recent gloom around NVIDIA.
Precisely. It's a direct challenge to that weakness we've been seeing. And you can see the impact already in the futures market.
Yeah, tell us about the current snapshot.
Well, U.S. futures are climbing pretty aggressively. The NASDAQ 100 futures are leading the charge, up about 0.55%. That's roughly 140 points. Signals a strong open.
Okay.
S&P 500 futures, they're up 0.3%, and even the Dow futures are adding a bit more, up 0.2%. So that defensive mood from yesterday, it's completely reversed for now.
Wow. Okay, so to really get a handle on this reversal, we probably need to look overseas, right? Because this whole theme of differentiation, picking winners and losers, it really started playing out overnight.
That's exactly right. It's a classic case study unfolding.
Mm.
You had positive global news clashing with some lingering global fear.
So what happened in Asia?
Well, the Asian session overall was mixed, maybe slightly positive, but you really have to look under the main indices to see what investors were thinking.
Okay.
So take Japan. The Nikkei 225, it gained 0.43%. Not bad,
Okay.
but those gains were definitely capped. And the reason, a huge signal that really poured fuel on those AI fears.
You're talking about SoftBank, I assume.
Exactly. SoftBank Group. Their shares plunged 3.5%. Why? Because they confirmed they sold their entire stake in NVIDIA.
Their entire stake. Wow, that's a massive position.
Huge, multi-billion dollars. And, when SoftBank, this giant, well-respected tech investor, just dumps its whole position like that, the market reads it as a signal.
A signal that they think the stock has peaked.
That's the interpretation, yeah. It just crystallized those AI bubble worries right there in the Tokyo session.
Okay, but then Hong Kong was different.
Completely different. And this is where it gets really interesting and kind of sophisticated. The Hang Seng Index in Hong Kong, it surged 0.85%.
So what drove that? Was it just broad optimism?
No, not really. It wasn't about macro sentiment winning out. It was driven by what we call idiosyncratic tech catalysts, meaning very specific company-by-company good news.
Gotcha. Like individual stories mattering more than the overall trend. Any examples?
Yeah, the perfect example is Xiaomi. Their stock rose 3.8%. And the reason? New data came out from the China Passenger Car Association showing their electric vehicle, the YU7.
Uh-huh.
It actually outsold Tesla's Model Y in China for the first time ever in October.
No kidding. Outsold Tesla.
For the first time.
Yeah.
That's a specific local bullish story just for Xiaomi. Has nothing to do with AI chips or SoftBank.
So what this tells us then is that investors aren't just blindly selling tech stocks. They're being selective.
Absolutely. Loud and clear. They're differentiating. They punished the Nikkei for that SoftBank macro signal, but they rewarded individual companies like Xiaomi for fundamental wins.
And that theme, differentiate or die, maybe, is what's now driving U.S. futures this morning.
Precisely. That global backdrop perfectly sets the stage for what we're calling the great AI differentiation right here in the U.S. pre-market. It's this battle of the chip makers.
Pitting AMD's positive forward guidance against that negative backward-looking news about NVIDIA and SoftBank.
Exactly. So on the one side, you've got the continued fallout for NVIDIA. The stock's down again, what, about 5.9% in pre-market trading. This follows a 3% drop yesterday.
Still the top loser then.
Yeah, top loser on the NASDAQ, most active stock too. And that SoftBank sale is really the core issue. The market sees it, rightly or wrongly, as a sign the AI chip leader might have peaked.
And there was other news supporting that view too, wasn't there? Something about CoreWeave.
Right. It's not just SoftBank acting in isolation.
Mm.
CoreWeave, which is an AI cloud provider backed by NVIDIA, their stock tumbled 16% yesterday. Why? Weak guidance.
Which implies demand for the actual services using NVIDIA chips might be slowing.
That's the implication, yeah.
Yeah.
It sort of lends credibility to that peak AI fear.
Yeah.
So the NVIDIA story right now is built around fear, past actions like SoftBank selling, and maybe slowing downstream demand.
Okay, so that's the negative side. What about the challenger, AMD?
Well, AMD is the complete opposite story this morning.
Yeah.
The stock is surging, up 5% in the free market. It's completely overpowering that NVIDIA-related fear.
And the catalyst was this Analyst Day outlook.
An extremely upbeat one, yes.
Mm-hmm.
They laid out some, frankly, staggering numbers. They're forecasting annual data center chip revenue reaching $100 billion within the next 5 years.
$100 billion, just from data center chips.
Just data center chips.
Yeah.
And they projected overall company earnings will more than triple in that time frame. I mean, that's a bold forward-looking claim.
No kidding. So this really is a sophisticated rotation within the semiconductor sector itself.
It absolutely is, and it speaks directly to our differentiation theme. The so-called AI bubble isn't bursting entirely. It's maybe just being refined.
Yeah.
Investors are selling the perceived leader, NVIDIA, partly on those peak fears triggered by SoftBank.
And they're buying the challenger, AMD, based on this aggressive new growth guidance.
Exactly. The market, for today at least, seems to be choosing potential future growth from AMD over NVIDIA's past performance clouded by these recent fears.
Okay, that makes sense for the chip sector. But if we zoom out again, look at the broader market, doesn't it seem a bit paradoxical? We've got this risk-on rally in stocks, futures are up nicely.
Right.
But at the same time, you're seeing what looks like a risk-off rally in safe havens. Bonds are rallying, yields are down, gold's holding firm. How can the market be bullish and sort of uncertain at the same time?
Yeah, it does look contradictory on the surface, doesn't it? But what's fascinating here is that this specific combination, stocks up and bonds up, gold firm, it's actually the classic signature of a market pricing in a more dovish Federal Reserve.
Ah, okay. And this links back to the government shutdown you mentioned earlier.
It all traces back to the political gridlock, yes.
Okay, let's unpack that connection. How exactly does a government shutdown lead to the market thinking the Fed will be more dovish?
Well, there are a couple of things. First, and maybe most importantly, this 42-day shutdown has created a huge economic data vacuum. Think about it. Key reports the Fed absolutely relies on, like the Consumer Price Index, CPI, the Producer Price Index, PPI, they're all delayed.
Right, we're basically flying blind on the latest inflation numbers.
Exactly, flying blind. And second, you combine that lack of fresh data with the clear economic drag the shutdown itself is causing. We already know consumer sentiment readings hit an all-time low recently.
So the Fed is facing a potentially weakening economy without the usual data to guide them.
Precisely. So the market is making a bet. It's betting that the Fed, faced with this uncertainty, this data vacuum and signs economic weakness, will be basically forced to pause its rate hikes, maybe pivot towards cuts sooner than previously expected, just to support growth.
Okay, and that's why bonds are rallying, because the market expects lower rates in the future.
That's the logic. The 10-year Treasury yield is falling 3 basis points this morning, remember. A basis point is just 0.01% down to 4.08%.
Yeah.
Yields falling means bond prices are rising. That's your classic rate cut expectation trade.
And gold fits into that picture too.
Yep, gold is holding steady around $4,138 an ounce. It loves the idea of lower rates, makes it more attractive to hold since it doesn't pay interest.
But interestingly, the fear seems to be draining out of the stock market itself, judging by the VIX.
That's right. The VIX, the CBOE Volatility Index,
Yeah.
often called the fear gauge, it's fallen further, down to around 17.17. That suggests big institutional investors are unwinding their crash protection, their hedges. They're getting less worried about a sharp drop, at least for now.
So almost every asset is reflecting this dovish Fed hope, except maybe oil.
Yeah, crude oil is the odd one out this morning. WTI crude is under a bit of pressure, down about 0.6% to $60.65 per barrel. It seems to be just holding its breath, really, waiting for some key reports out later today.
Okay, speaking of specific movers, beyond the huge AMD and NVIDIA story, what else is driving the tape this morning? Are there other interesting company-specific stories playing out?
Definitely. On the positive side, you've got Tencent Music, ticker TME. They just reported their Q3 earnings.
And how did they do?
It was a clean beat expectations on adjusted earnings per share, beat on revenue. The underlying story there seems to be accelerating subscriber momentum. So the market likes that fundamental strength and is rewarding the stock.
Okay, good news there. Anyone else gaining?
Lyft is also up about 3%, but this isn't really new news. It's more like follow-through momentum. They had strong earnings earlier this month, better than expected.
Right, I remember that.
And since then, there's been this steady stream, almost a cascade, of analysts upgrading their price targets. So that positive sentiment is still lifting the stock.
Got it. Now, what about the downside? The correction desk, as you sometimes call it.
Yeah, it's definitely busy over there too. Ford is a big one, down sharply, about 6.6%.
Wow, that's a big drop. What's going on with Ford? They had been rallying.
It's a major reversal. Seems like a combination of things. There are still those background macro worries about tariff chaos maybe affecting automakers. But the more immediate, acute problem is a new report about a massive global vehicle recall for Ford.
Ouch. Recalls mean costs.
Exactly. Rising warranty costs hitting their operational outlook hard. So that's taking the wind out of its sails.
Okay, operational headwinds. Any others like that?
Yeah, another one is Origin Materials, ORGN. It's down about 5.1%. This looks like a classic case of a broken growth story.
What happened? Did they miss earnings?
They slashed their future guidance dramatically. They cut their 2026 revenue forecast. They previously targeted, I think, $50 to $70 million. Now, they're guiding for just $20 to $30 million.
Wow, cut it by more than half.
Yeah. When you miss your own targets that badly, looking out that far, the market just loses confidence. It punishes that kind of miss severely.
Understandable. And one more loser.
Dragonfly Energy, ticker DFLI. It's sliding about 7.8%. This one seems to be driven purely by pre-earnings anxiety.
Anxiety, meaning traders are scared of what the report might contain.
Exactly. Dragonfly has a history of doing these highly dilutive public offerings, basically selling lots of new shares, which hurts existing shareholders. So traders seem to be selling first, fearing another one of those toxic financing announcements might be buried in the earnings release later today. Better safe than sorry, perhaps.
Okay, makes sense. So shifting focus to the rest of the day, what are the key catalysts we need to watch? You mentioned the Fed and energy data.
Yeah, absolutely. The session today is likely going to be dominated by those two things, Fed speak and energy reports.
And the Fed speak is extra important because of the data vacuum from the shutdown.
Precisely. Because we don't have those key inflation reports like CPI and PPI, the comments from Fed officials today become hypercritical. The market is absolutely starved for clues about the future path of interest rates.
Who's speaking today?
We've got three scheduled. Governor Christopher Waller speaks, and then Atlanta Fed President Raphael Bostic is speaking at 12:15 p.m. Eastern. Every single word, every nuance in their rhetoric is going to be magnified today because of this lack of hard data.
Right. The market will be hanging on every syllable. And then there's energy data Super Wednesday.
Yeah, sounds dramatic, but it kind of is for the oil market. WTI crude is really coiled, potentially for a big move, because we get this trifecta major energy reports all today.
Okay, what are they?
First, the OPEC monthly report, that's out this morning. Then, midday, we get the EIA's short-term energy outlook. And finally, this afternoon, the API's weekly crude stock numbers. That's a huge amount of supply, demand, and inventory data hitting all at once.
Could definitely swing crude prices one way or the other.
Absolutely. Big day for energy traders.
Okay, so before we wrap up, let's quickly look at the technical picture. You mentioned the S&P 500 ETF, the SPY earlier. How does that chart look now?
Well, confirming all the optimism we've been talking about, the technical outlook for the SPY is now looking undeniably bullish.
Because it broke through that resistance level.
Exactly. It managed to break clearly above that major resistance level we were watching, around $670. And, breaking $670 isn't just about the number. It's a psychological win for the bulls. That old ceiling should now act as a new floor, a support level.
So what's the key level to watch now to see if the bulls stay in control?
The critical pivot point to watch now is $672.40. As long as the SPY holds above that $672.40 level, the bulls really remain in firm control of the short-term trend.
And what are the targets on the upside if this momentum continues?
The next logical upside target is the first resistance level, which sits at $684.07. And then the ultimate prize, which might even come into view if this optimism holds, especially if we get a shutdown resolution, is the 52-week high for the SPY at $689.70.
Okay, quite a potential runway there if things break right. So let's try and summarize the key takeaways for you listening today. It feels like the market's really shaking off those recent AI fears, but it's doing it selectively, right? By differentiating.
Yeah, it's executing this pretty sophisticated move, selling the perceived leader, NVIDIA, partly of those peak fears and the SoftBank signal, while simultaneously buying the challenger, AMD, based on its massive new growth projections.
And this whole risk-on rally, it seems fundamentally underpinned by hopes that the government shutdown is finally ending, which paradoxically is creating this dovish-fed expectation environment.
Which ends up favoring both stocks and those traditional safe assets like bonds and gold, all at the same time. It's a unique setup.
It really is, and maybe that leads to the final provocative thought for you to consider today. Well, in this current environment, with the hard economic data, like inflation reports delayed, we're in this unusual situation where market direction and rate cut probabilities are being heavily influenced, maybe even dictated, by mere sentiment hope about the shutdown and the rhetoric from just a few Fed speakers today.
Yeah, that's a really great point. Relying on sentiment and rhetoric instead of hard numbers. That's a fascinating tightrope for the market to walk today, and definitely something that demands close attention.
A great observation to end on. Thanks for joining us for this deep dive into today's market structure and crosscurrents.
My pleasure. Trade sharp out there, and we'll catch you next time.